Hello, everyone, and thank you so much for joining us for part 3 of our boot camp series sponsored by our Chamber trustee, Wells Fargo. My name is Tanisha Nungary, and I am the president and CEO of the African American Chamber of Commerce of Central Florida. Today, we have an informative session planned for you, and today's session will be moderated by Ms. Candace Simmons, Vice President of Community Relations, Senior Consultant of Central Florida, Wells Fargo. Ms. Simmons is not only a supporter of our chamber, but she is a strong advocate of the African American community and specifically the Black business community. Candace, we're so happy to have you join us for part 3 of our boot camp series. And we just really appreciate the commitment from Wells Fargo and your support. So without further ado, I'll turn it over to you to moderate this morning's session. Hi, Candace.
Hi, Tanisha. Thank you so much for that warm introduction. As Tanisha shared, I am the Vice President of our Community Relations Senior Consultant here in Orlando in Central Florida. And it is always a privilege and an honor to partner with our amazing African American Chamber of Central Florida. And to Tanisha and her amazing team, thank you for an incredible 3-part boot camp series. And so hopefully those of you today have been able to participate in some of the other classes prior to today, part of our retool, recover, and restore. And today, as we kind of bring home this 3-part series, Tanisha and her team has an amazing lineup of panelists to speak to you today about restore and really preparing your business to launch into 2021, ready to take on any challenges and opportunities that you may have as entrepreneurs. And so, as I've always said, you guys did not come here today to hear me speak, but you came to hear these amazing panelists. And so, without further ado, I want us to get started. Our first speaker coming up is Lamont Jackson with BBIF, Black Business Investment Fund. Lamont Jackson is the Director of Management Consultant, and he joined BBIF in 2016 and manages their efforts to build capacity and sustainability for Black and minority businesses throughout the state of Florida. Lamont is a seasoned professional with over 20 years of banking, finance, small business, consulting, community engagement, branch management, loan review, commercial lending, credit administration, and CRA. Prior to joining BBIF, he was a consultant and business development professional focused on helping small businesses to mid-sized businesses with strategic planning, plan execution, infrastructure development, and access to capital. We are honored and privileged to have Lamont here with us today. Just a few logistics. Lamont's going to have a few minutes to speak to you, but after Lamont, we will have about 5 minutes to take questions specifically for him. So grab your notes, grab a pen, take great notes, post any questions. I'll come back on so that we can have time to do any follow-up questions for Lamont. Without further ado, I turn the floor over to you.
Well, thank you guys. Good morning, everyone. So honored to have this opportunity to talk with businesses and just share some thoughts around how do you restore in coming through this whole crisis, this pandemic that has really rocked a lot of our businesses. How do you restore? How do you come to some sense of normalcy in terms of being able to move your business forward? So I'm glad to be able to share a few thoughts around that, and then talk a little bit about some financing things, which I think will be important as well. Next slide, please. So just to kind of give you guys an idea, Black Business Investment Fund, we are a mission-driven organization focused on the development and promoting Black and minority business enterprises through education, through training, loans, investments, and activities that really help to set up and create that atmosphere for growth for businesses. Again, we are a CDFI, which is a community development financial institution. We've been around for 30 years, really trying to make sure that we can fight the good fight for our community and for our target. We cover the state of Florida, so we have offices in South Florida, Central Florida, and Jacksonville. Next slide, please. So part of the recovery, the road to recovery, the restoration, is about planning. And it's something that really kind of came to light when we were in the throes of doing PPP loans, and everyone kind of knows some of the challenges smaller businesses had in terms of being able to even access PPP loans. But one thing that really kind of bubbled up to the surface was that business planning was not something that a lot of our small businesses really focused on. And you have to do that. This pandemic really showed the need for planning. So this slide, just real quickly, I'm not going to go into all of the detail, just in the essence of time, but what it shows is some key areas that you as a business owner should be thinking about. Looking at where you're at right now, asking yourself some questions about your vision, your mission, your business model, what you're focusing on, what your capabilities are. Those are, for me, priority kind of things, especially in a time where you have business disruption. Next, you want to ask yourself, where do you want to be? And everybody wants to be past this into an area where you're actually having some business growth and you're having some profitability. Then you want to go into how do you get there? This is the strategic implementation piece of it. How do I get there? Looking at the scenarios, looking at your sales strategy, looking at specific steps and tactics that you can take. Then, who's going to do what? This is where your leadership as the owner of the business, leader of your team, really comes into play. And then you have to go through and do the analysis of, how are we doing? Is this the right road? Do I need to pivot? Do I make some course corrections? Those are critical things in any process, but particularly in this time. Next slide. So key to all of this is the financial management piece. And this is where I said, when we looked at a lot of the clients or potential clients that came through and were looking for PPP loans, what we found was that they were just not prepared with documentation, with financials and things like that to really set themselves up for us to be able to try to push through and get them the lending and the resources that they need. So you have to do this. This is a key critical point to be able to reach your goals. You have to be able to make good decisions. And that starts with knowing what your numbers are, knowing what your P&L says, knowing what your balance sheet says, and doing regular reviews, doing forecasts. That's something that we do with our clients. Part of what we do in addition to the lending is the training side, spending time with clients. I run the management consulting piece of it. So I get a chance to sit down with businesses, talk to them about their financials, talk to them about what they see in those numbers and how they use those numbers to really actually make decisions going forward. That's a critical piece, but it starts there. Plan, you have to use those numbers to kind of plan for, diversity, changing in products, reaching new markets, and then preparing yourself for financing. That's the first thing that any lender is going to ask you is, can you send me your financials? And you got to be able to send something that tells a good story for your business. Next slide. Part of that financial management is understanding your cash position. And you've probably heard this a lot because every webinar I've been on, we've been talking to businesses, we've been talking about cash flow, cash flow, cash flow. Well, cash is king, and that is truly, truly, truly the real deal. You have to know how much cash you have to run your business. You have to know, how the cash is moving in and out of the business. You have to have an understanding of what your conversion or your turn in your receivables and your inventory looks like. How are you converting that into cash? That's really important. Where's the cash coming from, and where is it moving to, and where does it need to move to? That conversion cycle is very, very important. You have to know that, and in one of the other slides, I'll talk about doing projections. This is the way that you really get a chance to understand, what's happening with the business, when you're going to need to make some changes in terms of how you're running the business. Next slide. So critical to, understanding the overall cash flow, cash position of your company is knowing what to do to improve it. Everything, of course, when it comes to cash or even the overall operation of the business starts with your ability to get more customers, paying customers. And let me just make sure I add that, paying customers. Increasing that sales number, that top line, is critical. That's always going to help you improve your cash position. You have to look at too how you're pricing yourself, your products, your service. Is it priced adequately? I had a lot of conversations with some of our clients around whether or not they should raise prices in this pandemic. Well, the reality is everybody is expecting some kind of price increase. And so your costs are still going to go up because there are still things that you have to pay for, like, additional cleaning. You're already, if you're in a restaurant or you're in a high touch environment where you're, connecting and engaging with customers on a regular basis, those things increase your price or your cost. And so you have to be able to kind of offset that a little bit. So a price increase is not inconceivable, as long as it's not something that's a hammer that hits them over the head. So you got to think about that. If you have receivables, you want to make sure that you are collecting. That's what accelerating your receivables is all about, collecting in a timely manner. In QuickBooks, you can do receivable aging reports. If you have anything over 60 days, you need to have some kind of plan in place to knock that down. You want to have everything in 30 to 45 days. Change the time of your expenses. That's something that helps you manage your outflows. Look for alternative sources. Having a line of credit is always good. Reducing the timing of draws. If you're drawing money from the company, you want to reduce that or change that. Buy inventory from your vendor. If you have carrying inventory, buy it at a lower cost, and then make sure you can get credit from the vendors, and not just for inventory, but also for supplies as well. Next slide. Some do's and don'ts in terms of cash flow management. Do not postpone paying your taxes. Again, do not postpone paying your taxes. That is something, particularly if you're thinking about your payroll, taxes for the state, things like that, because they can come in and shut you down. And that's a lot. If you're shut down, then you're really, really going to be hurting. So that is one thing that you don't want to do. If you need to make an arrangement with them, make sure you do that. Call them up and say, hey, everybody's struggling. I can give you $100 a week or whatever that number is that's comfortable for you. Make sure you do that. Don't hide from your lender or from your debtors, because they understand the environment. And so first thing you do is call them and say, hey, here's what I can do, and let's work something out. Don't pay vendors late, because if you're getting supplies and your inventory and things like that from them, especially on credit, They can shut you down, and then all of a sudden your flow of services and product in the business can be hurt. Don't overestimate your revenue, and don't underestimate your costs. Next slide. Projections. So, I mentioned that doing cash flow projections are important. It's important. That's an important exercise. You're going to use that to really kind of understand how you restore and stabilize your company. Predict ahead cash needs, your inflows and outflows, future needs specific to maybe a particular, a specific period of time. Some businesses are very seasonal, so you need to be able to do your cash projections to kind of understand what that looks like. Whether or not, your inflows, your receipts, and your outflows are matched up so that they're covered. You got to make sure that that's happening. Cash flow projections also help you understand and set sales and expense goals. You want to be able to understand, what is my break-even point? What do I need from a sales perspective to be able to make sure that I got all of my expenses covered, those variable and fixed expenses covered? Or, planning for purchases, for some folks that are maybe contractors that need to buy equipment, doing those capital plans. That part of that is that cash flow projection. You're going to determine, the level of inventory you need for seasonal. Track your liquidity. Liquidity is everything. You want to make sure that you have enough money to run the business, because one of the things that, we always talk to clients about how they are doing their accounting, and a lot of small businesses, they don't know the difference sometimes between the cash basis and the accrual basis. And for the most part, most of the businesses start out on a cash basis, but that's not necessarily how you're supposed to do your accounting. And the accrual really matches up your effort with the timing of the revenue, but it also can mask some of the realities of the cash shortfalls. So you want to do your projections to kind of help you determining, once you've done that projection, you know that you have a shortfall. Now you know what your what your lending needs are. And then that also shows the lender that you're paying attention to that. And based off of that, it also shows whether or not you can repay a loan. Next slide. So that's all of this is leading up to, kind of into the business financing, access to capital, things like that. All of that leads to this point where now you're thinking about, what do I need for funding? Your business financing and funding needs really should be thought of as truly a way, and not just a transactional way, but a true way for you to support the growth and sustainability of the business. And so in every area that you're doing, there's going to be certain things that you need to do and need to have, whether it's purchasing equipment, acquiring manufacturing, or managing just overall working capital. You need to have a real good sense of what that looks like to be able to have a conversation around finance. Next slide. I want to just kind of show this for some folks that may be in those early stages of their business. Whether you're a startup or you're truly, a seasoned business, that second or third stage of your business, financing sources come from a variety of different areas. You're in the startup stage, it's going to be, personal savings. The early stages, or friends or family. But there's also other sources as you move through the maturation of your business. that you're going to be looking at opportunities to really fund the business. And if you look down at the startup through the established stage, one of the things that you'll find in here is that, well, you'll have opportunities to go and talk to a bank. The bank is one that's going to want to really see you in that maturing, established stage. But organization like BBIF, we are a community financial development financial institution, or not, nonprofit lenders will look at you in all stages as long as it is a compelling and good story that allows us to see the potential for the business to grow based off of the business model and the funding needs. Next slide. So when you get into that conversation, there's some things that you got to consider. And this is, universal to most lending institutions. They're going to consider, capacity, collateral, credit history, conditions, and character. When you are, a startup, it's really about your personal credit. So most lenders are going to look at all 5 of those C's, and we also sometimes throw in another C into that as well. That's, are you committed to this venture? So you have to kind of understand where you're at from a business perspective and really start to be prepared to tell the true story around what's going to happen with the business, why you're looking for the funding, and making sure that if you are in that early stage, that you have done things to really improve some of the critical things that will happen in that early stage, like making sure you have credit, making sure that your personal credit makes sense, making sure that when you put together your business plan, your financials, your projections, because that's all it's going to be, you don't have any history. Your financials really kind of tell the story of the potential of the business. Next slide. And, this is a kind of another look at it. So for those businesses that are maybe in that more of that maturing, established stage, this is going to be what most lenders are going to look at, especially if you already have a banking relationship and you've been, you have deposits there and you've gotten loans from a bank before, or you've gotten loans from BBIF before. This is what we're going to be looking at. Collateral is not necessarily the key here. Is understanding the business credit and maybe looking at some non-traditional credit data, looking at the business and what the next stage or evolution of that business really looks like based off of your request, and how does that all kind of fit in. Next slide. So I kind of want to wrap up with some key takeaways here. Business planning is a key to restoration and growth. And again, want to make sure that you take some time. One of the things that we used to do, so I used to work for Disney for a long time, and one of the things that Disney did in the area that I worked in, which was finance, is we spent October, November, December putting together a plan for the next year. You don't want to fall into the next year. You want to have an idea of what you want to get accomplished, what your sales goals might be, what your profitability goals might be, and put some actions around there so that it's not just you wake up and it's 2021. It's 2021 with a plan. So that is a critical piece to making sure that you can grow and restore your business. You have to focus on financial management. You must know your numbers. That's going to be the first thing that any lender, any investor is going to ask for. Cash flow management is a core competency. That means that should be a part of everything that you do. You should always kind of know what your cash position is, how things are flowing in and out of your business. Forecasts and budgets are a necessity and they only work well when you do the proper assumptions. And a lot of times, business owners don't know how to pull those things together, but there's a lot of resources out there to kind of help you think through that. We work with businesses, the clients that we're working with right now. That's what I'm having them do, is do some exercises around putting together the budget and a forecast for this next year and understanding where you want to be and what you want to get accomplished. Rapid cash conversion cycles are critical. You got to be able to convert your efforts into cash so that you can sustain the business. So if you have receivables and you have inventory, they need to be churning. Make sure that you're looking at your accounts receivable and making sure that you don't have anything that's stale or beyond 60 days. You have to put something in place to make sure you're collecting. Cash flow projections, should be done on a regular basis to help you preserve your liquidity and plan for seasonal fluctuations in your business. Accessing funding is really about financials and the story they tell about the potential growth of the business. So, if you're using QuickBooks or you're doing Excel or whatever, they need to be accurate and be able to tell the story that this business is or has the potential to grow. Right? You got to know what you need when it comes to lending. Again, this kind of bubbled up to the top where a lot of our small businesses were not prepared. They weren't generating financials, or the financials that they generated weren't accurate because they hadn't gone back in if they were using QuickBooks and reconciled, or they're just not keeping up with the numbers. You have to do that to be prepared. You got to be prepared. Look for funding sources beyond debt. I know that's really important too. There's still some grant programs that are out there, but you can't continue to pile on debt because that creates an over-leveraged position that can also cripple your business growth as well. And then finally, seek advice from a CPA, accountant, bookkeeper. Don't try to figure everything out when it comes to the numbers by yourself when there's a lot of resources out there. And some of those resources are not as expensive as you may think. Next slide. And that's all I have. So thank you so much. I'll take questions.
Awesome. Thank you so much, Lamont. That was incredibly informative. I took some good notes. As a reminder, there is a questions box. If you will go ahead and take a few moments and ask any questions you have for Lamont, we will throw those at you. For a couple, so I already have one.
Okay.
Because you talked a little bit about, making sure that you are prepared for financing as a business.
Yes.
What are some, and if you can share, what are some tax mistakes that businesses make that actually hurt their ability for lending?
So, so most of the time what you'll see is, if you go back and look at a lot of these small businesses, look at their tax returns, and what you see is that they're losing money and they're not actually doing actual P&Ls or doing a P&L or a balance sheet. So they don't have other financials. If you go to a lender and all you have is your tax return and it shows that does nothing to really help you in terms of being able to get a loan, because what that says to a lender is you're not making any money. How are you going to be able to pay anything back if you're not, if your tax return shows negative, or you're, in that tax return, you're taking a large distribution, you're taking all the money out of, and that's usually what happens. That's usually why most of the tax returns are negative, is because at the end of the year, they take this large distribution out and this basically drain the company. You got to keep it in there. Retained earnings. You got to have that, because that builds the company. You cannot raid the company every year. If you need money, put yourself on salary. You should be doing that anyway, but put yourself on salary. One, that helps you really account for all of the expenses of operating a company. So
Right.
that's one of the biggest mistakes that we see. And
Awesome.
that stops the conversation right there.
Right. Awesome. Thank you. We do have a question from Aubrey. How far forward should you forecast your budget? And make sure I'm asking that correctly. How far forward
Yeah.
should you forecast your budget?
Yeah, so for doing forecasts, so for a budget usually is about a year. Doing like forecasts, when you do forecasts, it's really about maybe a single line item, like a sales forecast or a net profit or P&L forecast. But normally just 1 year is good. If you go beyond 3 years, it's a crapshoot because it's hard to really say with good assumptions that this is really a possibility after 3 years. So
Right.
I would say don't do anything beyond 3 years.
Awesome. Thank you. You also mentioned plan for diversification, whether that be adding a new product line or trying to enter into new markets. And I think COVID-19 has almost made that a requirement that businesses are having to learn how to pivot. What are some steps or best practices you can give a business that maybe they're just kind of stagnant because they're needing to diversify either their products or their services or their location? What are some best practices around that you can give a business who needs to explore their options?
So I think first and foremost, one of the things that I suggested for some of our clients to do is to go back and look at your business model. Look at who's buying your product and why, and then look at the product itself, the product or service itself, and see if there's a way to look at ancillary or adjacent opportunities within that. So it doesn't take you too far off of the beaten path of what you do, but there's still like some outlying opportunities for you.
Yeah.
So
like complementary
so,
products, not
yeah,
taking your business back to square one
right,
necessarily.
right. So case in point, so one of our clients makes like facial creams and lighteners and things like that. Well, the market kind of, people are like, well, we're not going out, so there's no real need for beauty products, but there is a real need for sanitizers. So our conversation was, well, you're already a chemist. You can formulate this product and still be able to have some sales. So doing things like that allow you to kind of look at maybe some of the other opportunities that may be there with just maybe a slight shift in what you're doing.
Great example. Thank you. We do have another question from Michael. What are some of the lending products available at BBIF, and what are the respective financial requirements?
So we have a number of different loan funds that we use to help deliver access to capital to our clients. So we have a dedicated Black Business Loan Fund that is truly just for Black businesses that goes up to $150,000. We have 2 SBA programs, microloan that goes up to $50,000, and SBA Community Advantage Loan Fund that goes up to $250,000. We have a contract financing program for contractors. And then we have some larger loans for those folks who are doing their established businesses that are maybe purchasing real estate or maybe even doing acquisition of another business. In a distressed area, we have a new market tax credit loan fund. All of those kind of, the baseline for everything is making sure you got good financial numbers. And then everything else is, that's the beauty of BBIF, is that we can go and look case by case and see what the story is telling us and see how we can help.
Nice. Well, thank you so much, Lamont. I do want to let everyone know if you're still thinking of questions or something comes up later on in the program, Lamont's going to stay with us. And so at the end of today's event, we will have time to pose some additional questions to Lamont. So I know I didn't get to all of them just yet, but I promise we will get those back out there to you. So hang tight, Lamont. We got a few more coming your way. Thank
All
you.
right, sounds good. Thank you.
Thank you. All right, we are going to keep our program moving along. That was extremely incredible and informative. And next up, Heidi will deliver the same. And so Heidi Hay is a CPA, is a licensed certified public accounting firm in the state of Florida. Heidi is an Orlando native who graduated from Jones High School. Look at there, a little history here. Heidi is the first in her family to go to college, first time generation. She holds a bachelor's and master's degree in accounting. Heidi has worked at a small public accounting firm and a national public accounting firm. At both firms, Heidi has gained experience in business and personal tax planning and preparation. And I think she's a great mix to this conversation because Lamont gave us some great tips on what to do. And I think Heidi can tell us how we make sure we do that. And so without further ado, I give the floor to you, Ms. Heidi.
Good morning, everybody. Thank you, Candace. That was a great introduction. You make me look good. I like it. So when I was approached just to give a presentation to the chamber, I just kind of thought like, what is going on with COVID and all of these grants that are coming out? And, you know, a lot of small businesses are saying that they weren't able to get the funds. You know, we think about these large businesses like Ruth Chris, Shake Shack, the LA Lakers were able to get funding and basically take all the money to where there was nothing left for people who have small businesses, and they really needed those funds to keep running. So I just had to think of what was the difference in what these large businesses had that small businesses don't. So my topic is going to be professionals that all small businesses need. So this is a team that you should have relationships with for your small business so that you, when it's time for anything, you can just hit the submit button, just like all of these larger corporations did when there's an opportunity ready. So on the next slide, I put my background, which Candace already went over, but in addition, I am also certified with QuickBooks. I love QuickBooks. It's very easy, affordable for small businesses, easy for small businesses. They have small businesses in mind with QuickBooks. 6 years of public accounting experience, and I just opened up my own CPA firm. So I'm a solo practitioner, and I'm also a member of the Florida CPA Society and the American CPA Society as well. That's where I really get my updates and I stay on top of everything that's going on within like the economy and tax law. So on the next slide, I just want to make sure that I cover these 3 items. So my objectives is for everyone here to be able to identify who they need to contact for their small business, benefits of having these relationships for your business, and then just how to find these professionals to help you for your business. So next, on the next slide, is the necessity for a team. So having this particular team of professionals, we're going to make sure that you're going to be in compliance with all applicable laws. You know, they're always changing. So having someone in an area where that's all they do, they're going to make sure that you are compliant. You're going to be ready and prepared for that next endeavor. And I'm not just talking about a COVID grant or some other stimulus package that's going to come out. I'm talking about if you want to expand your business, get a loan, get a grant, merge with another business, sell your business, government contract. A lot of these endeavors have a short window of opportunity, and you have to be ready. You have to be prepared. You have to be first. So having this team is going to make sure that all you have to do is hit submit when you see that opportunity. This team is going to be up to date on all compliance applicable laws, like I mentioned before, and they're going to be experts in their field. This is what we do all day. And we're going to help you avoid those common business operation headaches. You know, you get another letter about something else and you have no idea what it is. Having a professional team in place, you're not going to see those letters. So we help you to prevent those costly mistakes. So on the next slide is the first professional that I advise everybody should have. I'm so happy that Wells Fargo is sponsoring this because yes, you need a relationship with a banker. So far since I've opened my practice in these past 6 months, I've noticed that a lot of people don't have a separate bank account for their business and their personal transactions. Super important to have that because I need to see what is actually affecting the business and to see what expenses are for the business helps me to see how great or how not great the business is doing. So we don't want to see, you know, Netflix or Disney Plus coming out of your business account unless it really is a business expense. A banker is going to offer different banking products for your personal and commercial needs. So definitely sit with a banker. They have a lot of different options that could be beneficial for your business. And I know that several banks offer free tools for starting your business, managing, and growing your business. Absolutely free on the website. A personal banker will definitely be able to talk about that more, but it's a free tool. I definitely recommend you use those tools. And it's important to schedule an appointment. I just say sit down with someone and talk to them. You don't know what you don't know. Doesn't hurt, it's free, and the banker will be able to assess your business and see what you need. So on the next slide, which is, I'm happy that Lamont is here because loan officers are really important to create a relationship with, and you already know why. Lamont did an excellent job of speaking with a loan officer. He talked about the different lending options for growing your business, which is what I like to focus on as well, growing your business, paying down debt, evaluating your business for approval of a loan for various business needs. And when I say business needs, I mean expansion. Maybe you need to purchase a piece of large equipment that you need now in order to merge with another company or fulfill a contract that you just received. So definitely just sitting down with the loan officer. You may not even need anything right now, but you may need something in the future, and just having that relationship, knowing what you need to do to possibly get a loan or some other product that the loan officer has will get you ready for that opportunity. On the next slide, business insurance. Business insurance, getting with an insurance agent or a broker is really important for protecting your company. The insurance agent broker is going to evaluate your business for different types of insurance that you need. Like myself, I have errors and omissions insurance, cybersecurity. So depending on what your profession is, that insurance agent or broker is going to evaluate what you need. They're going to have current policies for protection and pricing. You may need a large policy, you may need a smaller policy, it just depends. And they're going to assist in protecting the assets of your company. So you may have your business all set up, but you really want to make sure you have the insurance there in case a claim comes along, that you're protected and you're going to have a whole business. And I do have an example, a great example of insurance on one of the phone calls with the state society, the Florida FICPA, which is the Florida State Society. One of the CPAs mentioned that their insurance broker had pandemic written into their insurance policy, which basically means all their coverage for payroll, all the money they're losing is going to be covered by their insurance, which I didn't even think was an option, but it just goes to tell you sit down with your insurance agent to make sure you know all the options and possibilities that you can have for your business in your insurance policy. And then the next professional on the next slide is going to be the financial advisor. Financial advisor is going to really take a deep dive into your whole life, business, personal, your kids. They're going to look at the span of your life from retirement. So a financial advisor is going to be really great in assisting and creating a plan to meet your financial goals. I mean, it could just be, I want to have a good retirement. I have some succession planning where maybe I want to sell my business at this age. They're going to help you save money, invest wisely, and reduce debt. And of course, the financial advisor is going to be my favorite person just because of the potential tax savings, setting up that IRA, solo 401k, a simple plan for your company. They're going to set that up for you and help you take advantage of some of those tax liabilities where you can lower your tax liability. The next professional that I want to make sure everyone has on the next slide is going to be the business attorney. So the business attorney is going to provide legal services for operations and regulation of the business, advice on formation, corporate law, sales and transfer of the business. They're going to negotiate, draft, review your business contracts, and then they're going to help you avoid any business losses in the long run. One thing that I see over and over is people are setting up an LLC. So in Florida, when you set up an LLC and it's more than one person that owns the LLC, you are required to have an operating agreement in effect, fully executed, signed by however many people are in that particular LLC or partnership. It's something that I need when I file your tax return, and it's just required, and that business attorney is going to help you with that. Another thing I've seen is business setup. So a lot of businesses, they set up their LLC, then they get their federal ID number from the IRS, and then that's it. But in actuality, there's like 2 more steps that you have to do to get your business set up. You have to obtain a city business tax receipt and also a county business tax receipt. A business attorney is going to make sure you have all that set up. And a great example of this is the Orange County CARES grant. A lot of people was applying for this grant, but one of the stipulations was that you had to be a Orange County approved business in order to get this grant. So you had to have that business tax receipt on file with Orange County. So people who already had this business tax receipt with Orange County are getting the money out of the CARES grant pot, but a lot of businesses weren't. And when I saw it, I helped a few of my clients get their business tax receipt with Orange County, but eventually they had a 4-week waiting time. Like they had a wait list where it was just like, it's going to take 4 weeks to process this business tax receipt. So once again, there's this big pot of money, and just because you didn't have this one certificate, a lot of people weren't able to apply and get those funds. And then on the next slide is going to be the most important person that you have. You heard Lamont say it, the very important professional, the certified public accountant, the CPA. That'll be me. So it's really important to have a CPA because we have gone through rigorous training. We're highly regulated. It's a professional license that we get from the state of Florida. We have to get education, not just a bachelor's. We have to go above a bachelor's. We have to gain experience. We have to actually work under another CPA for a whole year before we can even get our license. And then the license at the very end was we have to pass 4 tests. So it's like proven. I have a whole certificate that says I know what's going on with the tax code and with everything is with businesses. So it's very important to have someone with an extensive background, knowing what's going on with your business and the accounting. The next bullet point there is a CPA is an accountant, but all accountants aren't CPAs. So you may know someone who is familiar with accounting. They know debits and credits. They may know cash flow projections about like what Lamont was talking about. But a CPA is going to be one step above that because we do provide bookkeeping, tax preparation, financial statement preparation, financial planning. We do help with internal audits, but only certain class of professionals can go and represent you to the IRS. So you may have someone that's preparing your tax return, but then they're not able to work with the IRS to resolve any issues if that tax return comes up for an audit. So it's just that small differences that really impact your business. And on the next slide, I talk about accounting is the language of business, and this is from Warren Buffett. We know him as one of the wealthiest people in the world. And I say this because, you know, Lamont was talking about knowing your numbers, talking about the P&L, the balance sheet, talking about cash versus accrual accounting, cash flow cycle, return on inventory, break even point. That's accounting language. And that's where CPAs come in. We actually can coordinate with other professionals of the business. So when Lamont is asking you for projections, you know, I can help you with that. I actually do have one client that is with BBIF, and he was having these monthly meetings, and my client came to me asking for particulars with his financial statements, his profit and loss statement, and his balance sheet. And I was like, you know what? Let me just attend a meeting with you so I can understand what they're asking for. So I did. I attended the meeting. I got to talk with the BBIF advisor. You know, we talked back and forth, and then I understood what he needed. So by the next meeting, I worked on all the financials for the client, and when I presented them to BBIF, the advisor, he was like, okay, yes, this is what we needed. So that's kind of a CPA's role. I know the language of business, and I can coordinate with other professionals. If the business attorney needs anything from you, any numbers, I can get that for you. Financial advisor is going to ask for a lot of numbers. So I can definitely provide that information for you to work with the other professionals. So CPAs are trusted financial advisors who help individuals, businesses, other organizations reach their financial goals. So I want your business to do not only just well, I want you to thrive. You know, honestly, if your business is doing well, then I'm doing well. You know, I want your business to grow. You're going to need me even more. So it's kind of like I'm personally invested in what you're doing because I want to make sure that you are successful. And you definitely need a CPA because there could be a risk of missing something important or something you just didn't know. Tax laws have changed so much. One thing I do see clients, you know, they have is they deduct meals and entertainment. Well, you can't deduct entertainment anymore. That was back in 2017. You can only deduct meals, and there are additional rules around like meals. Another one would be employee business expenses that changed back in 2017. So there are different rules around that. So you just want to have a conversation with a CPA, just like with the other professionals. What's changed? You know, we are up to date on what's going on. And the last bullet point is a quality CPA helps your business with strategic planning throughout the year, not just at tax time. So I'm going to be contacting you at least once a quarter to see how well you're doing, looking at that profit and loss statement. Lamont mentioned estimated taxes. I absolutely agree. You have to pay estimated taxes. You don't want to pay a penalty and interest on money that you already spent. So I have a client who does cupcakes on the side. She makes vegan cupcakes on the side. And this year, she did very well making these cupcakes and delivering them to different businesses and individuals. And every quarter, you have to pay the IRS that payroll tax, essentially what it is called self-employment tax. If you don't, and you just pay it when you file your tax return once a year, the IRS does assess additional penalties. They basically go, okay, for the first quarter, you owed us $1,000, so they calculate a penalty for not paying that $1,000 on time, and then interest for the whole year to when you actually pay the money. So, working with the CPA, we're going to save you from paying those unnecessary penalties and interest. And then on the last slide, I just kind of talk about where to find these professionals. I recommend recommendations that from other business owners, word of mouth, internet search with ratings, because you want a quality professional, someone else has used, what was their relationship, was it good, bad? You want someone that a little background about. And then a great resource is the Chamber Member Directory. The Chamber on blackcommerce.org has a listing of all the members. It's a great resource to reach out to someone on the Chamber that's someone invested in working with small businesses and helping them grow. We're professionals. We want to help everyone in the Chamber that we're a part of as well. And then just to recap on the next slide, I want to make sure that everyone understands that every business, it doesn't matter if you're a Fortune 500 or just small vegan cupcakes, you want to make sure you have a banker, loan officer, insurance agent or broker, an attorney, financial advisor, and of course, a CPA or certified public accountant. All these professionals, we have, continuing education. We're going to be up to date on all changes that come through tax law or other means. And then finally, you're just going to have that peace of mind that your business is in compliance and protected. So while you're working in the business, you don't have to worry so much about working on the business. You have these different professionals in your corner doing that piece of it. You don't have to worry about doing yourself. One of the things that I've been helping my clients on is the PPP loan forgiveness form. Now, let me tell you, that form is not easy. Even it took me like a few minutes to read through it and kind of ask what was needed. So that's why I know they came out with a shorter form, which is so much easier. But for those larger amounts, it's going to take some numbers. It's going to take some time to get in there. I definitely recommend that you consult with a CPA to help you through the process of anything that has numbers or finances. Working with that loan officer, definitely I can assist in those matters. And then on the last slide, that's all I have. That's just my information. I do have a submission form on my website. It's a new client form. Just hit new client. You can put in all your details, and then it'll be me reaching out to you. Thank you.
Awesome. Thank you so much, Heidi. Girl, let me tell you, I wrote those 6 down because that is truth. And I think you can remove where you put on the slide 6 folks businesses need. Those 6 partnerships is what any individual breathing, living, walking this earth needs. Because even if you're not running a business, even in just your regular life, whether it's home ownership or retirement or just in general, those 6 are really what we should be teaching any individual, especially entrepreneurs, but everybody should have those 6 on speed dial in their phone. So go ahead. The question box is open. Go ahead and get your questions in for Heidi. I do have one. You talked about the first partner is a banker. And as a banker, you know, we say it till we're blue in the face, like you have to have a relationship with a banker, and it can't be a transactional relationship that going into the bank to open the account or to add a signer or to cash a check or to do a wire is not a relationship. It's going in to just chat and talk about what's happening in your business, what's changing in the bank. That's a true relationship. And so my question is, how many banker relationships is a good mix? So, you know, when we talk about credit, for example, we try to teach folks how to diversify revolving credit or their loan type credit. With banking, do you recommend not having all your eggs in your basket with one bank, having maybe one or two solid banking relationships, or go, you know, having that main one? What's your recommendation as to how many banking relationships a business should look to establish?
So I do like to have one solid banker. However, we do all know that at a certain point, the FIDC, FDIC, that your deposits are only covered for so much money. So when you start hitting that limit, then yes, you do need to open up a separate bank account, because if something does happen and you hit that limit, I believe it's 250,000 now. So if you have more than that in your bank account, you do need to open up a separate bank account, because that is a risk. So I'm definitely, as a CPA, risk adverse. So if it does take you to open up more than one account at different banks, then I definitely suggest that.
Awesome, thank you. The other thing we have posted here, it isn't a question, it's more of a ask. And I will help, and you've already provided your information, but maybe the chamber could put your contact information back online for Raquel to grab it. But Raquel Perez, who is with the Early Learning Coalition, she is the director, and she runs the Early Learning Business Institute, which is catered towards early learning providers in Orange County, and is helping those entrepreneurs who have a passion for kids really understand and sharpen their skills as an entrepreneur in running the actual business itself. And they run this institute, I believe, twice a year. Wells Fargo is a proud supporter and seeded this organization coming into the Orlando market. They originally started in Miami, but Raquel would like an introduction. And so Raquel, here's Heidi's information, and she says, thank you. And we will work to connect the two of you amazing young ladies following this call. But I wanted to put that out there so that you are aware, Heidi, that following your presentation, someone just wants to follow up with you.
Definitely. Always open to new opportunities.
Yes, yes. Any other questions? Continue to post. At this time, I do want to bring Lamont, if he's still there. Lamont can come on board as well. We'll give him a moment to awesome. Lamont is back. Well, to Heidi and Lamont, on behalf of Wells Fargo and on behalf of the African American Chamber, truly want to thank both of you for all of the amazing information you provided to the businesses this morning on really how to prepare ourselves and recover. And I think what you all gave us were the tools we needed in our toolbox to build a stronger, better 2021. And so at this time, we will open the floor. If there are any follow-up questions for either Lamont or Heidi, continue to post. We do have time to take those. I want to go back to one question Kenneth posed for Lamont. Can you explain the difference in understanding credit for service entities versus products?
Credit, and are you talking about credit for personal credit or credit for the business in terms of being able to get service products? So for instance, if you got a product and you need materials and you got, you're getting a credit relationship with the vendor to supply you, or is it just overall just credit for the lending piece of it and getting a loan? So, but
So can
the
you
end,
correct, I believe it's around loans. So is there a difference in being able to get extended credit when your business is one that provides a service versus a business that provides products?
so yes, at the end of the day, it's still going to come down to what your numbers say in terms of the profitability of the business, service, product, or whatever that is. You're still going to be able, we're going to look at the financials and say, this company has X amount of sales, this company has this level of profitability, and based off of maybe the credit or the credit request, they have X amount of money to be able to cover that debt. So at the end of the day, it's still going to come back to what your financials say about the potential of the business. And it really doesn't really matter. There may be some few little nuances in terms of how the numbers are rolled up, so to speak, in terms of your financials. But at the end of the day, when we look at your net income, and we put, we'll add back in, depreciation and things like that to come up with a number, a cash number that can cover the debt. That's what drives everything when it comes to understanding what you can afford from a credit perspective.
Got it. Awesome. Thank you. Heidi, we have a question for you from Aubrey. She says, my business provides software as a service through a mobile app, and I expect to begin receiving revenue from clients in 2021. How do I determine if I need to collect and pay taxes on that revenue? And I think this is going back to, you talked about how you help businesses pay quarterly versus waiting to the end of the year. So I think that's probably related to those statements.
Yeah, so software as a service is also part of what a business attorney will help you with as well, just because you have to make sure you have everything in your ducks in a row where they need to have that particular asset protected. But on the accounting side, we actually need to make that an asset on your book. So anything you're spending on the software in the creation of it has to sit on your balance sheet. And then over time, we depreciate that expense. So you do have to report it. If you don't have any money coming in, that's fine, but you may have just a reporting factor for the IRS. So that was something you have to take a look at. But if the business started this year and you do have expenses, especially with that software, you do have to make it an asset to sit on your balance sheet, because that's, it's worth something.
Yeah.
And then when she starts to collect actual revenue that she sells, how does she know when to start paying on that revenue?
Oh, so revenue estimated taxes are quarterly. There are specified dates from the IRS, 4/15, 7/15 to 10/15, and also January 15th of the next year. And that's basically looking at your profit and loss statement, looking at what's coming in, what's going out that is related to the business. And then you do a quick calculation at the end. Payroll taxes for small businesses have to do the employer and employee side. So at minimum, after you do your revenue minus your expenses, you're going to have to pay 15.3% on that net income.
Awesome. Thank you, Heidi.
Yeah.
So this question is for Heidi or Lamont. For those small business owners a little intimidated by managing the books, what are some of your recommendations of software platforms that are user-friendly and easier to navigate with little background in financial management?
I'll let Heidi go first. Go ahead.
Definitely QuickBooks. And QuickBooks has different products. So they have one called Simple Start. They have one called Self-Employed. I do not recommend QuickBooks Self-Employed. It's really, really basic, and you're going to have to move over to a more formal QuickBooks platform anyway. So definitely QuickBooks has a product called Simple Start, and that is really going to be for businesses that are just starting out. Even if it's just a side business, you definitely want to use that one. It's, I want to say $25 per month, but it's actually worth it because when you have to produce financial statements, all you have to do is click a button.
And I would echo that, you know, QuickBooks is a good tool with the way they've kind of changed the software with having an online version of it versus the desktop version. It makes it a lot more affordable, but it's a really good way to start out in the very beginning, making sure you have the right financial system in place to make sure that you're getting a good, accurate look at what your efforts are generating for you. Now, there's also, I believe it's called Waves, another free software out there. I'm not as familiar with that, but it is another opportunity for you to have some kind of accounting system in place. The bottom line is have something. You cannot do back of the napkin.
I like that back of the napkin. And I will piggyback, even though the question wasn't for me, I do just want to put a plug for our Wells Fargo Works for Small Business site. And Heidi talks about the benefit of having banker relationships is that you can tap into free tools and resources that are out there. So it's Wells Fargo Works for smallbusiness.com. It is a free site. You do not have to bank with Wells Fargo to take advantage of it. But some of the things that Lamont and Heidi both spoke about today, the tools are on that site for you, absolutely free. And so Lamont talked about having a business plan. There is a workable document that will allow you to add and change and create as you build out and create your actual business plan. Lamont also talked about, at some point you may have to increase prices or decrease prices when you're having to pivot. And one of the features I love about the site is our competitive analysis, where you go in, you plug in your business, the type of business and your address, and it will compare for you what other businesses in the same industry are doing in your same radius. And we use this, for example, it was a daycare provider who was very hesitant to raise her prices. But after doing this analysis, she realized she was under her competitors. She was charging less for her services, and she was underpaying her employees less than her services. And so making a small tweak to her pricing schedule brought in an additional 100K the following year, which allowed her to also bring her pay scale up for her employees. And so that tool is there and absolutely free, regardless if you bank with Wells Fargo. So I just encourage you guys to check out that site, Wells Fargo Works for small businesses. Kenneth said, just want to give you guys some feedback. Kenneth said, excellent presentation. Thank you to the chamber presenters and sponsors. Raquel also said, thank you. She gained a wealth of knowledge. And she appreciated, Tanisha, the entire 3 series. She said she's taken away with so many contacts. And Mia, yes, I will send out that web address to Wells Fargo Works for Small Business to everyone who registered with us today. One last question. Are we good on time? One last question. So Heidi said, I participated in a meeting with my client at BBIF. She said my client was going through these monthly meetings, and as their CPA, I was able to attend that. And Lamont, I know you talked more about your lending, but I also think the business is understanding what those meetings and what the TA side of BBIF does. Could you share just a little bit about what this infamous meeting was all about and that resource that you bring to the businesses here in Central Florida when they decide to partner with BBIF?
Absolutely. So one of the things that we recognized early on in doing lending and doing this over this 30 years is that, the money alone is not enough. A lot of businesses fall into a business maybe because they work for somebody and they decided, you know what, I can do this myself, or just an opportunity kind of fell into their lap. And now they have this business, and maybe they come to us and they say they need funding, but there are some other things that need to be considered in really truly running a business, creating value in that business, and actually having it grow and scale. And so we recognized that we needed to plug in gaps in terms of the resources, the skills, and those kinds of things, and building capacity. And so we started doing technical assistance. That's what we call it in the industry. But really what it is management consulting. So we're taking time. If you have a loan with BBIF, one of the things that is going to happen on a monthly basis is that my team is going to meet with you. We're going to talk with you about the business itself. Every month, we talk about your financials. We ask for financials every month. We want to review those financials and have a conversation around what we see in the numbers. We want to talk about the broader scope of what's happening with the business. If there are specific challenges, either related to, a project or hiring or workforce, we are going to have conversations within this meeting about that, and be able to provide you with some guidance and context to think about, how do I tackle these specific challenges? We meet with our clients one-on-one for about 30 minutes to about 45 minutes, depending on the complexity of what we're having a conversation around. And again, we ask for financials up front. We have a team. It's myself. We have a CPA that's part of our team. We have a business strategy person that's a part of our team. And for those contractors, we have a contractor consultant that's part of our team. And so we bring all of these resources kind of to bear to kind of make sure that we can look at your business and provide you with some good, focused guidance on strategy, tactics, and execution. And, one of the things, I talk a lot about planning. Say I came from a planning environment, something that a lot of our clients don't get a chance to really do or even think about. And so in these last 3 months, meeting with our clients one-on-one, I'm asking them to do these specific exercises, and we hold them accountable. So that next month, I'm going to ask you, I asked you to do this trending report, or this trend spotting report, or this analysis of your workforce. Let's talk about it. Where are you at? What did you find out? What came up in terms of what you saw in doing this? And how do you use this now to kind of move into next year, knowing what you've uncovered in there? So that's our meeting every month. I'm sitting with you. You're the client. I'm sitting with you. So tell me about what happened last month. I see your financials. Your numbers went up. Your numbers went down. What is this line item here that doesn't making sense? So we're asking, real kind of deep dive questions with these clients to help them really get that true growth in their ability to be good business owners. And for some of our clients have come in and they didn't understand a lot of the basics of financials and things like that. Now I have some of them that they talk it better than I could.
Awesome. Thank you so much for sharing, Lamont. I like to call that roundtable some of the best accountability partners you can find, who have the best interest in your business. Once again, Heidi and Lamont, thank you guys for an amazing presentation full of information and insight, and connecting once again our small business community to the resources that are available. And with that, I turn it back over to Tanisha in the chamber.
Wow, thank you, Candace, and thank you so much to Lamont Jackson of BBIF and Heidi Hay of Heidi Hay CPA for not only providing so much information, but also just a lot of resources for those in attendance this morning. As Candace said, we will provide their contact information if you weren't able to get it. We'll email that to you, as well as the resources that Candace talked about that are complimentary and provided by Wells Fargo. Candace, again, thank you so much for moderating today's webinar. and to Wells Fargo for sponsoring this 3-part boot camp where we have come together to retool, recover, and restore. And we will continue to do this in 2021. So I just want to talk a little bit about our chamber. If you are not a member, I encourage you to visit our website, blackcommerce.org, where you can sign up and become a member to attend our webinars as well as some of our events and have access to a group that will support you and just resources that are needed now more than ever. So again, if you are not a member, please check us out on our website or email us if you'd like to set up a time to speak with us about membership at info.org. Let's see. Please follow us on social media so you will see what we have in store in 2021, where we will continue to support our businesses. Here are our handles for Facebook, Instagram, LinkedIn, as well as YouTube, where you'll be able to watch some of the webinars that we posted over the last 8 months. And of course, we have holiday deals, and we want to showcase them. If you are a member of our chamber, because membership has its privileges, you can email us your membership and holiday deals at info@blackcommerce.org. Again, please look on social media because we have a lot of videos that have been prepared by our members highlighting some of their holiday bills and their businesses. And we want to encourage everyone to shop local and shop Black and to support our chamber members. And now, we've been blessed to give out some grants here. We gave out $100,000 in grants in May. Recently, we just selected 3 grants with the AT&T grant, and we'll be announcing those winners in the next few weeks. And here's another opportunity for you to apply for a grant in the amount of $10,000. So again, it shows you where to visit and apply there, connect.clover.com/grant. And Fiserv is a member of our chamber, and we partnered with them to just offer these grants in support of our small businesses. So again, we encourage all our members to visit that website and apply for that grant. And there is a deadline, it's December 14th, so time is of the essence. Do that today. And of course, Eagle Awards. Eagle Awards is the event where we usually all come together during Martin Luther King holiday weekend to showcase and show our brightest in the business community and recognize Black business excellence. It will be virtual next year, like everything has been, and it will not be in January. It'll be a little late in the first quarter, but nominations are opening soon. So please check out our website in the next few days, as well as look on social media so you will see the different categories where we will be accepting nominations. And with that said, this is our last webinar of the year. And we just want to thank all of our members and the community for being here to support us. And just know that we still stand with all of our members and the business community as we move forward in 2021. We ask that you all please remain safe and know that the chamber is here for you. If there's anything we can do to support you, just reach out and email us. Thank you so much. Everyone remain safe and happy holidays. Bye-bye.